Hello, everyone, and thank you very much for tuning in to this amazing webinar brought to you by the Soltesz Institute. My name is Viktoria Soltesz, and I'm the founder of the Institute. And as you know by now, we are fighting for an ethical, transparent payment and banking industry when everybody can be informed and make the right decision when it comes to international payments, banking, transfers, and we discover all of those little details about compliance, technology, user experience, and other parts of payments and banking that usually not that many businesses are paying attention to. So thank you for joining me. I have today Sergey, who is the CEO of Alcoin, and we will be talking about a very interesting topic, which is so in right now, about crypto compliance and convergence, where fintech meets the future of finance. And I feel like that there are a lot of information about crypto out there, but it's more about how you're investing and how to get rich quick. This is not that kind of webinar. We are just discussing how we can use crypto as a payment method. What are the different regulations around crypto? And what is the real risk if you're using crypto versus using the traditional fiat currencies? How banks are having an approach to crypto as opposed to fiat, and what do you really need to know in case that you want to use a crypto as a payment method if you want to add this to the payment mix. So thank you very much, Sergey, to join me today. Please tell us a bit more about yourself. How did you end up in payments and banking, specifically in crypto? What are you doing now in this field?
Thank you, Victoria. I hope that's not the last stop I have. So thank you very much for having me today. And I think that's going to be a very interesting conversation we'll have today. For those who don't know me, my name is Sergey. I'm the CEO of the Alcoin company, which is a core banking software as a service provider. And I'm really looking much to contribute to today's talk, in particular to those of you who are planning to launch their neobanks, or perhaps you are already in the industry. So it would be interesting to have, some of the thoughts, ideas to be shared across today.
So let's jump in. We've got some questions from the audience, as we usually do, regarding the topic which we are discussing. It just gives a really nice skeleton to the conversation. And the first question is about, what do you think? Is crypto part of fintech? If yes, why? If not, why? What is the main difference between fintech and the traditional fiat currency-based fintech companies?
That's a brilliant question, actually. Talking about those definitions, many people, when they hear our name, our company name, Alcoin, they immediately think of some token, a cryptocurrency, or something that kind. And it takes really some time to explain that we are part of tech. And effectively with crypto, is not just part of a fintech, is really a most disruptive part. So it's a true combination of technology, blockchain technology, which is infused with cryptocurrency, and we have a wonderful suite of a new dimension. So it's also the servers, the equipment. So it's all about tech, but it's really make up the decentralized models, and eventually they integrate into traditional financial systems. So that's really an interesting part of fintech, indeed.
I can see that a lot of people are complaining about how slow the banks are and how complicated the compliance. And now it's very hard to innovate in terms of technology when you have to deal with a dinosaur kind of underlying system. So a lot of companies started to evaluate stablecoin-based transactions internationally, which could be obviously quicker, cheaper. Through the decentralized ledger, it can be more trustworthy, it can be traceable. But there are a lot of questions still around that. What shall be the basis of our banking system? Because we definitely need to revamp that. What do you think? Crypto-native firms will evolve into these full-service financial institutions, or they will remain niche players and just help the banks and traditional financial institutions with the liquidity, for example, for stable coins? Or you see a whole innovation around it when stablecoin base is going to be the new banking?
That's very interesting question there on market dynamics, really. And to tell the least, people like to use this word disruption. And, for many of us, the disruption and banking, those two words doesn't really live with each other. I have a different thought here. So I think we'll see a bifurcation. So for instance, there are crypto native firms, especially those with robust compliance framework, scalable technology, strong user base. And these companies are becoming now what is called truly financial houses. So they provide lending solution, they provide asset management, payments. And so starting off with the crypto DeFi proposition, they now emerge into all sorts of different areas of the banking, of the everyday banking life of ourselves. But the other one is the niche players. They would have a further specialization. So they would be in a DeFi protocols, NFC. And my personal take is that blockchain technology is still a hugely untapped and huge of potential industry. And we'll definitely see a lot of niche use cases that might actually scale into giants, into new unicorns.
Let's say that someone wants to start their fintech company and they are thinking about what shall be the base. And there are a lot of rumors going around that, hey, if you are using crypto, maybe you can bypass some regulations or, be a bit creative. There's still a little bit of window of opportunity. But even though that they are doing the right thing and they're regulating everything to the dot, let alone fiat or crypto, there could be still a bit of raised eyebrows when this fintech company wants to join the international financial system and looking for correspondent accounts or looking for partners who are giving them the different rails. So what do you think? Crypto community is just serving now the crypto community, or you see that there is some kind of overlap when the crypto-based fintech innovations and fintech companies can have access to the traditional banks because now these two worlds are getting closer to each other? Or it's still, if you're in crypto, certain banks are going to be a no-go for you for sure?
Thank you very much, Victoria, for this particular question, because we're asking this same question every day. And every time we're working with our partners, our projects, and of course, clients. And there is no ultimate answer for that. So we've come to many cases where some solutions have worked for clients, but the others one were completely, a waste of resource or time. But all in all, I think the most important is actually converging to two different aspects. The first one is the trust building, which is something that many new crypto and Web 3.0 projects are lacking, is building the community that is, of course, not only a hype, but also a sustainable community with a real implication. And the second, which is nicely is the outcome of the first one, once you have a trust that you're trying to build, is of course, what is the use case? What is a real life problem you are trying to solve? Because ultimately, any solution, blockchain included or DeFi included, is of course there for us to solve everyday problems. And essentially, if we can build the trust around this efficient solution to everyday banking needs, this is where I think we are on the same page with entrepreneurs, with founders, and of course, the lovely teams we're meeting across. On the contrary side, if we're talking from a back-end perspective, it is important to get allied with partners and infrastructure providers who actually understand the difference between NFC or a token, at least, or what it is, utility or a security token. So, not necessarily being expert on omics or, coding and solidity, but essentially for your banking partner, they should know what risks your business is bringing to their business model in order to have an efficient solution that simply works for you, for them, and of course for the end consumers and the business stakeholders.
We actually had a client not that long time ago who were absolutely perfect in tech. They were all coming from developing background and they were like programming a state-of-art kind of platform, but they were not really strong on fin. And fintech is together creating the fintech. So we help them with the understanding of what is the reason why certain banks do not want to work with their setup. And their setup was pretty straightforward. Have a stablecoin based new innovation. It was a wallet service. And in this way, you can send money and receive money much quicker, easier, and obviously cheaper internationally. But their initial thought was going to the big players, going to their high street bank and try to open an account there and get the license and try to serve all of those clients under those financial licenses as a traditional fintech company. But when they tried getting an account with Stripe or going to Citibank or HSBC, that's when they realized that, okay, they don't really want to work with us. Why? We are doing everything what we can. The technology is great. So what do you think? Is it something that you see as well, that as soon as the traditional financial institutions and payment providers see the word crypto or see the word blockchain or has some kind of trigger regarding all of the decentralized technology, they immediately say no, and then the new fintech company is in trouble? Or what do you think? Is it getting better now? Banks are more open to these kind of new companies?
It is, again, it's one of those situations where you have really leaped through this case. There is no one size fits all or something that there is some proven path which everybody should take and go there. And it's really simple answer to that is because it's true innovation. Okay, we are creating something new, something absolutely different from what we've used before. So for many institutions that have been there for some time, it's a natural thing to do. Risk perception is some product risk or something that they haven't looked through properly, or perhaps they are afraid of some unidentified risk areas, essentially. But speaking of the projects that are particularly heavy into tech, and not many people actually can understand what the project is behind, for these projects it's important also to get along with the term called compliance. And, for many non-banking people, the compliance is a bit of a new term, right? But essentially, the compliance is really what can bridge the gap between the banking partner and, of course, the DeFi project. Is if there is some kind of a rule that is followed by the people in the business when dealing with clients, when dealing with end users, there is, of course, a natural build-up of mutual respect or understanding. But having said that, that there would be cases where institutions are risk averse, and no matter how hard you try, there's simply no room for your project within their strategy plans. And for this case, my advice would be, if I may say advices here in this room, would go along with partners and banks who actually understand your needs. There are a lot of banks in the world, worldwide. There are crypto-friendly banks, especially now, who are betting on the newer industry and who want to change the competitive landscape. So this would be institutions and banks, neobanks, for instance, who would be crypto-friendly and perhaps support the business that, traditional institutions perceive as no-go or too high risk, for instance, traditionally.
But I think it's just so hard because everybody's first idea is to go to the legal team. And if the legal team says that you are legal, you are not breaking any rules, technically you can do it, but then you go out in the market and try to find partners and everybody is rejecting you, then there is a kind of like a paradox situation that in one way I'm doing everything right, but in another way no one wants to work with me. What is wrong and where do I go wrong? And unfortunately, all of these banks and financial institutions, because they are private institutions, they don't even have to justify why they don't want to work with you. So I have seen cases when they made a very subjective decision on a no simply because they checked the CV of the owner and it turns out that the person was not involved in fintech before. So for sure, it's not going to catch up. So some blatantly minuscule reasons, then you spend so much time and energy and effort into the project just to break your nose when you're hitting the wall wherever you go and looking for partners, right? So I think this is also a very important aspect that you as a company need to understand that, yes, at one point you're legal and yes, the legal advisors can tell you that, yes, you're doing everything by the book or there is no regulation, therefore you're not breaking any rules. But it's a whole different story to find banks and payment provider partners who want to work with you, right? Is this something that you also see, or is it just me?
No, I really feel you here. I really feel you there. Absolutely. And to tell you the least, it's really a frustrating situation. More not only the feelings, but also the investor side, because the bank account, bizarrely is the place you pay people salaries, you pay taxes, and of course interact with the government, but also with some of the suppliers. So without having the bank account, even for DeFi project, maybe a barrier for some operational matters. Again, perhaps here would be interesting for our listeners to just go and consider what different jurisdictions have in terms of the licensing, and perhaps some of the licensing is suitable for various different businesses. And licensing should not be perceived as a bargain or a slowdown factor. We have a different take here on licensing, is that it can actually discuss and define the rules that the market participant should follow. And it would be interesting from that angle to look again at the project, and perhaps legally everything is there, but just having this batch on top of your business or some audit there actually may add a significant difference to what it is.
Yeah, my personal opinion, actually, when you're looking for a license or you're trying to gain a license, I think it's 90% because you want to satisfy your partners and payment providers who are then stronger the license you got. They became less risky, obviously cheaper, better terms and conditions because there is less risk around you because you're regulated under a stricter license. And around 10% to show to your client. So the licensing became that kind of tick box of having connection to the relevant partners or payment providers, so you can actually join into the international finances, right? But I'm very glad that you mentioned this regulation, because I can see that there are new regulations coming on, but somehow whatever is happening in, let's say, in Dubai, it's a totally different kind of regulation than what's happening in Europe, right? So that's the next question as well about MiCA readiness and regulation. What are your thoughts on the challenges, opportunities of the directive? What do you think? Does it make sense? Is it a good regulation? Would you change something? Do you see that it hinders innovation? It's like, tell me everything, what you think about it.
The first thing I can tell is quite a long one to read, right? So we can start with this one. But, jokes aside, what MiCA did is something no regulation did before. It's a major leap forward, actually, on regulating and giving the market clarity for crypto in Europe, at least. So now we have a clear framework for understanding what's the asset tokenization, for instance, where is this blurred line between crypto asset management and some crypto derivative products. So all of these come, starting to make sense now under MiCA. And this actually brings a lot of challenges for not only new companies, but also existing ones, because firms must reevaluate everything from their white papers, their governance structure, and various disclosure standards, something that haven't nobody thought of before. For newcomers, this may not be a implication intense exercise because they are starting, they are greenfield, they are about to launch to the market. But if we consider existing companies, the ever-increasing bargain of compliance, and for instance, the MiCA regulation, it may be a mandatory requirement for your business. And if it is so, then it may actually jeopardize the economy of the business and investor trusts in the long run. But, speaking of the opportunity side, of course, regulatory incentivized, clear framework, structured approach, like play by the book, and you're going to be fine. And within this environment, investors are happy to invest because what we're doing with the regulation, we're making something that is high return, high risk of a Web3 or crypto project. So we're lowering this risk down while keeping the high growth opportunity still in the room. And I think it's very interesting to see how institution will adapt to the MiCA in the short and of course long run. But it's in the essence, it's a legitimized milestone that could set a global, case for a balanced crypto regulation. So perhaps few jurisdictions are going to make it less strict as MiCA, but still having a regulation is great from institutional perspective and of course from those traditional institutions that we have discussed earlier today.
And you don't think that it's going to put Europe in a position when there are less and less companies who are interested to be regulated under Europe because it's just too complicated and too much of a paperwork, and it's overall one of the strictest, if it's not the strictest, crypto regulation out there. And then maybe they go somewhere else.
What comes to my mind is actually 2018, where there was the PSD2, the revised payment service directive that was entering into the market. And a lot of people back then were discussing, stating, and actually criticizing the PSD2 because it introduced two notions as account information provider and payment initiation provider, which was completely new to the market. And many experts actually were very concerned over the security, because what it is in essence is an open banking interface, which would essentially let accessing your banking data to anyone. With this data liberty, it sounds great, but it comes at the cost of increased security and of course potential cyber attacks and etc. What I think with MiCA is, of course, there are businesses who seek some deregulation or perhaps regulatory arbitrage. And for these cases, there is still a gap in different jurisdictions, even across the EU, for instance. But this is already a signal. It's a market signal, and there are going to be no reverse for that or undoing of this action. And we'll see some other jurisdictions will join that. But of course, some of the jurisdiction already saying that it's too much of a regulation. Let's not kill the innovation and the business. So it really depends on what type of consumers and what type of end users you want to target. Should it be the EU consumer base, then you have to comply with EU rules and regulations. If you are providing your services outside of EU in some other jurisdictions, then proper regulatory framework shall be selected then. But what's great about the market, it's fragmented, and because of that, there's a lot of opportunity and things that we can explore on an entrepreneurial level.
It is so interesting to see that how the strictness of the regulation is affecting the market, because you went back till 2018, and I remember that even earlier, around 2016, 17, the first crypto regulation was in Estonia. And I'm sure that you remember when you just went there, incorporated a company, and then you get a license light for somewhat about, I don't remember how much was it, 25,000 euros. And then you had a regulated, EU-regulated cryptocurrency exchange, which gave you access to have correspondent accounts and, start to act as a quasi-bank based everything on crypto. And then when the regulator realized that what's happening, there was thousands and thousands of those companies. I remember there was big scandal as well, that there was a lot of misuse of that license. Then the regulator started to implement stricter rules. And then the payment providers and all of those correspondent banks said that as well, that yes, I accept an EU license, except the Estonian license. So it was really interesting to see that how the strictness of the license was really affecting the market's hunger to go to certain jurisdictions. And that's what's happening today as well, that if the license is very strict, it's a MiCA license, and then it's so complex, then companies say that I don't even want to deal with it. I'm going somewhere which is good enough for my payment providers, good enough for my banks, but it's not overwhelmingly putting a lot of pressure on me and on my operation to adhere to all the regulation to the dot, right? So it's interesting to see that this regulation is a double-edged sword of like doing the right thing, but not scare the businesses away, but not to be too light that it opens the opportunity for all of those bad actors who are just want a license and get away with it, right?
No, absolutely. And really this case with Estonia is very, very much of the evidence of that. Different regulators react to the market differently. And you will have this unique opportunity back at the time where literally you could have been there and working without so much of a compliance overhead as comparison to MiCA. And ultimately, what we have been witnessing as we do business is some other jurisdiction actually pop in search of crypto. So for instance, the Canadian jurisdictions, Canada provinces are quite active in this field. But also in terms of Europe, again, there are some differences, how the regime, like this famous grandfathering and grandparent, this regime that kind of allows us to have a last glimpse of fresh air before everybody going to be closed down or something.
Very true. Okay, that's a good question for you. What do you think about the travel rule? Because this gave some nightmares to some crypto exchanges out there, just how to implement it, how to be regulated in the right way. Travel rule, what do you think? Friend or foe?
When I first read about it, it was kind of like we're trying to catch different witches or something. Because for me, really much do feel that the blockchain is already transparent enough for any checks inside of the transaction. So the traceability is there, whether it's native token or some other networks there. And essentially, when we added travel rule, we've had to do double work, because now all of a sudden we had to actually understand not only the blockchain semantics, but also add a little bit of a proper banking layer, like as you would find with anti-money laundering directives, where the correspondence bank should do something about transactions, they should investigate. So clearly we have turned somewhere in this junction and decided that, okay, let's take a path where crypto and blockchain becomes a subsection of banking products. And this is where it all began, right? The travel rule, and actually it's evolving one. It's not just we need to check the holder of the wallet. You know, in the latest guidance, there's also a lot of questions on whether the wallet is self-hosted, whether it's hosted with any of the centralized exchanges, for instance, the top market, Coinbase or Binance, for instance. And it's just getting more and more into this traditional banking compliance, which actually is something that every crypto exchange should do, and eventually do the sanction check on the holder. But fundamentally, there is no true evidence or a holder of the wallet actually being one. So there's still a lot of gaps in understanding, and of course issues, systemic issues, for instance.
But it's the same when, the bank is asking for your utility bill, but how can they double check that indeed you pay that much electricity at that period? No one can call that electricity authority and say that, hey, Sergey really paid 100 euros this month, or, he's just like faking the utility bill. So I feel like that there is a lot of element, as you say, coming from traditional banking, just to tick the box, just to make sure that people at least start to pay attention to those things. But as we say, if it walks like a duck and quacks like a duck, it has to be a duck. So if it acts like money, you're using it as traditional fiat money, that eventually it has to be regulated as fiat money as well, right?
Of course, if you talk about the different side of it, of course, we as a people, we want to have a safer place for our finances, for instance. Don't want to have any more like quadrigas, FTXs, and so on and so forth, right? But it doesn't mean that we necessarily want to shut down all the oxygen and don't have any innovation. What it really means is, okay, so centralized exchanges are sometimes really exposed to various trade manipulations and market manipulations. And if you want to build trust into something that, you want to share with the wider people, and then have sort of a replacement for some, payment rails with some blockchain driven initiatives, you need to start with trust building. And of course, when we do the trust building in something that is linked to crypto, linked to blockchain, of course, this doesn't help. Scam coins doesn't help, pump and dump doesn't help, and many of this stuff doesn't really help, because that's just the perception we need to work around.
That's true. I was talking to someone the other day, and the person said that, what, we just see 1920s over again. It's just all the market manipulation now is just used by crypto. So it's just funny how the history repeats itself, right? But let's go abroad, because the next question is really about how to take the company really internationally, right? You've got a crypto exchange, which is regulated, let's say, under MiCA, but when you go abroad, you start to struggle to manage the regulatory complexity across multiple jurisdictions. You need to satisfy this regulator and this bank and that bank. What's your take on the real cost of getting compliance wrong or even just getting it inefficiently? And I'm talking about what happens if you think that the best license for you is, let's say, a European license, and it turns out that, you could just get away with a Canadian MSB for $15,000 instead of €500,000. So what do you think? What is the real cost of not getting it right and not having the full picture from the get-go?
I think this is a very fundamental question to ask. Anyone should ask this question. And the earlier you ask it, so if you start thinking global from the day one, it's actually saves you a lot of your energy and effort in the long run. But what it really means is it's really coupled very much with a particular business. So what it does, what customer it services, what product it delivers, but also what is the go-to-market strategy. So what is this systemic market-by-market penetration path that we want to pursue, which of course can lead you into a clear plan where you should prepare yourself and be at within 2-3 years or more. So you start watching those jurisdictions, you start to understand how regulators feel about newcomers into those markets. And aside of the market is actually how the institutions support the market. And again, we talk about the compliance and having the poor compliance and inefficient compliance, what you, Victoria, just said. So we go in one jurisdiction, the second, the third, etc., and we just multiply cost of compliance times the number of jurisdictions. So the importance is we have a really tangible and intangible reaction of the business onto the compliance. And for instance, on the tangible side, you may face some enforcement actions or even fines, which of course, a no-go path to anyone. But also indirectional impacts is of course reputation. And so people may think of how should my compliance do anything with reputation of the business? Perhaps it's not something we intentionally want to damage or something, but it's a very simple link actually. When you sell something, when you deliver something, people are using this product, and if there are some compliance inefficiencies, people will immediately spot that. A payment is delayed, crypto to fiat transaction is pending too long or even blocked perhaps. And all of those are just the symptoms of a more fundamental issue that lying beneath. And essentially, in short, is nothing but business risk. So this legal risk becomes a business risk per se.
This is so true, because we had a client not that long time ago who just went to the lawyers, getting all the information about the license to the dot. I mean, no offense, the lawyers did a great job of explaining that what are you allowed to do, what are you not allowed to do, how to set up the KYC, MF policy and whatnot. But there was no mentioning about the viability of that license, because it's a whole different thing what you get on paper. And yes, you adhere to that and tick, 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 and you get the license. But the next step is like, okay, now what? Even though that we've got the license, what are the opportunities for all of those partners who are then determine the price and the terms and conditions to me? Therefore, this is what I can pass on to my clients as well. And as you say, that could be delayed payments, that could be frozen accounts, not because there is something wrong on my operation, but because my partner is not sending the money on time, or they are freezing my company account as a bulk, and that's why my clients can't have access to their funds. So it's a balancing act, how you are balancing the license, how much licensing is too much, how much licensing is too little, with the reputation, with the viability, with the customer service. So it's a very complex case, and you can't just expect lawyers to tell you that, yes, those are the licensing requirements and that's it, because maybe the regulator takes their time, and maybe after 3 years, you still don't have the license, even though that you tick all the boxes. And of course, shareholders are getting a bit more frustrated. When do we go to market? What can we do? And that's when obviously the problems happen. But what do you think? This is an excellent question about as well, that how should fintech balance the innovation speed with the burden of the multi-jurisdictional compliance? And I think what the question means here is that let's say you've got multiple licenses in multiple jurisdictions. One is allowing you to do something, one doesn't. What is the kind of risk that you can take of, okay, even though that license doesn't allow me to do something, how can I innovate within the existing license and maybe just slice up the transactions in an operation, which is regarding this license, I'm doing everything under that, but I can go a bit more innovative under a different license.
Well, we're now moving truly global scale, Victoria, with yourself.
Yeah.
And, it's almost like we're building a new Google or Alibaba in Europe now. So, but again, the innovation is come with a compromise, and we can, of course, use the word as a balancing act, as a neat balancing act. Fintechs, especially those who have a cross-border proposition, especially those who deal with different countries in different currencies, should build compliance into their product and into their product lifecycle even. So it's not just we are doing a new release, you're adding some features, some knobs, some buttons so that users are 360 degrees happy. But ultimately, we are thinking smart about the regulation that are associated with the product you have. And then if this means essentially what it means investing into solutions like modular solutions within where you can argue whether it's a low code environment or no code environment or something that is jurisdiction agnostic, for instance. But in essence, it's very simple. If you have this feeling that this regulation is about to change, then it should be as your process variable. It should not be taken as granted. Because otherwise, if you're fixing something like a regulation inside of your business model, it will become a matter of redoing something you already built. And especially when regulations change frequently, when regulations are not aligned with different countries, when they are different with different countries, you should have a product settings, nothing but product settings that cater for those nuances and subtleties found across different jurisdictions. So building an intelligent product essentially. And what we've also found is, the sort of big question here is how many licenses we should have, right? Could we have all of them? Okay. Well, maybe not, right? There is no need for having all of the licenses, okay? But what is important is that once you mastered this multi-jurisdictional, like global approach, you're starting noticing some of the synergies between licenses. So, I'll tell you, for instance, in a few years ago, there was this massive, and still is a massive popularity among fintechs to go to Lithuania and connect to SEPA, to go direct with SEPA clearing, to be the only one there between the end user and SEPA payment. And essentially the model there was that you as a fintech, you are regulated effectively by two different countries. So you may have your home country, so for instance in Belgium, and then you have Lithuania that also regulates your business. So although you have a direct value for your business, is direct access to SEPA, it comes at a price. And then the question is down to your financial modeling, down to your forecasts and the business scale, if it all pays out. Is it worth it, effectively? And you will never answer this easy. It's very case-to-case sensitive. And especially some jurisdictions allow you to start very fast. They allow you to start small. They allow you to prototype your product without significant investments. But other jurisdictions are requiring much more effort initially to obtain, but also to sustain. So this is a very interesting game where you can start the business off, accelerate your customer base, your flows, and then try to legalize your parts of the business in more, home type jurisdictions.
Yeah, here is a trick no one talks about, but it's an industry standard. When you have a license in a more restrictive, more reputable jurisdiction, which is obviously more expensive, and then you tick all the boxes doing the right thing. But at the same time, within the same group, you have a license light, which is only allowing you to, for example, handle a wallet, or the jurisdiction doesn't have very strict crypto regulations, so you can actually offer certain services through crypto under that license. And in this way, they can get the best of both worlds. the higher risk, good paying clients, while the reputation is maintained under the good and traditional license. Is it just me, or is it something that you also see that there could be, even within the group, some kind of arbitrage opportunity of innovating more and taking more risks under cheaper and easier to acquire license? In the meantime, they have a more robust and proper license where all the good customers are getting onboarded.
This is absolutely brilliant question, Victoria. This is the essence of what it be a payments entrepreneur. You know, you need to do some compromises, do you?
True.
You have the customer portfolio that may be very different into the properties of customers. So some customers, they need to have just local payments and nothing else, but they need speed. So they need this absolutely smooth payment process for something that is very low risk, but they want to do a lot of payment. This could be salary payment. This could be micro payments between their members of ecosystem, for instance, but they want these payments to be very fast. And of course, they're doing like a lot of payments, but at a very low transaction amount. So there's like micro payments. And contrary to this, you may have corporations like corporates or multi-country businesses, trade businesses who operate, who trade, who do cross-border transactions, which of course are high value, lucrative, and over spectrum. Essentially, it's very as a kind of stretch on your compliance team and your operations. How could you actually please both categories of these clients? And again, there is such a clear understanding. There is no one size fits all. You need to treat corporates as VIPs because they are indeed high intense paying clients, but there are a few of these clients. And effectively, those like more volume intense customers may be used for something else, like ramping up the payments volume to open new doors and open more interesting doors in terms of your whole economy. So effectively, if you have large account balances, you can have a lot of client cash in your possession as a, for instance, EMI or a payments company. There are starting to be interesting mechanics, for instance, some client management practices, overnights, or additional revenue streams you haven't thought of. And so contrary to like large corporates, you may have a very interesting synergy with your low risk clients who need this instant payment push in different countries. Something like cross-border liquidity pools, where you balancing different account floats like in one country and the other, can only be happening if you have a lot of funds to begin with. And this is where those client portfolios can actually help you up to grow and earn even more through ways you haven't actually thought of, that the services you don't even provide directly. So like indirect services and indirect synergies arise there.
Nice. Now tell me everything, how technology can help all of those clients who are now thinking about setting up a crypto exchange, setting up their own fintech company, how technology can advise beyond just doing the bare minimum, which is obviously providing a platform and providing the integrations and doing what the technology does. But a good technology provider can also help me with, it works for the others, maybe it works for you, or giving you any kind of market intelligence as well, right? A bit of hand-holding, a bit of insider information that you might not get from your lawyers, you might not get from your finance team, right? So tell me how technology can actually support all of those success.
Well, it's not a huge secret, Victoria, that technology has no limit. Through business language, through something that we define and something we think of, is the result. The result is new product or new technology or new innovation that haven't been there before. And it's actually coming through a conversation, through a communication, where we can actually talk through all of those flows, all of those processes, and actually ask a lot of questions. Some of these questions can be very dumb, some of them very hard, but that's where the heart of the product is through. So we need to have a proper statement. And in the other side, so where we have some different insights, what we try to build is we try to build ecosystems and some partnership opportunity between our projects and, of course, partners we have outbound, inbound, because they already have solved this task and they have already cut through the woods. They just been there, done there. And essentially they have got some expertise and some business knowledge. And what we really want to facilitate is the exchange of this business knowledge on the operational level. So it's not just telling some funny stories, which I'm sure you know a lot of, and I have a few of them, but also sharing them on the more technology base. So let the technology connect with each other, let it talk inside of their like zeros and ones. And in the end, we have this nice ecosystem where niche players can do what they want to do. They are then supported by more broader financial houses that can accommodate various types of risk profiles and different propositions. But ultimately, there would be some payments aggregators and larger players who don't really care much of individual cases, but they are working on a large volume. So they work on large numbers, big data, and statistics. So this is very a broad spectrum here, but ultimately is creating an internal market, essentially, where different licenses, where different market participants can engage and deliver value to end users, to me and you, to make payments, whether it's crypto, whether it's fiat, whether it's a card or anything else, just as you would do with, before with physical cash, for instance.
And also everything is changing all the time. So just because you think that something is going to work back in 2020, today we have completely different approach, regulators having new ideas. The environment is changing, your company is changing, you realize that I was thinking I'm serving those clients, but it turns out that I've got more interest from different risk level clients, maybe coming from different jurisdictions. So this never ends, this balancing act of how to fulfill the regulators, the requirement, how to help my clients to do the international transactions safer, quicker, better. What are the partners that I have access to? How they can support me? Everything is changing all the time. And of course, technology is also changing with the new innovations. Maybe you paid so much for development yesterday, and today you can actually just replace that cost with the AI or any kind of other innovation. So I think this conversation just never ends, because there's always something going to come up which is easier, safer, cheaper, better. And of course, your technology provider shall be there to support you in this journey. Am I saying right?
We're all evolving here, Viktoria. We don't know, maybe tomorrow you'll just invite an AI agent here and you're going to be talking the full hour there. But what I think is still we need to add a little bit of personal touch, their charisma, and of course share some interesting insights with real people, because that's what matters the most, is actually the people conversation and communication with each other. So I think that the conversation is never ending, and shall the people be doing those conversations.
That's true. And people do business with people at the end of the day, let alone be your clients or your partners or anything in this ecosystem. Okay, is there something that you think that we should talk about and we haven't mentioned? Is there something that you would like to add before we wrap up?
So I think anything that really matters is, of course, how we can adapt to the change and how we can meet those expectations of our users, of our stakeholders. And of course, the same as with business, now we all go into this jurisdiction and it becomes a modern one. Similar with tech, there are some trends, there are some ideas, but I think we really smashed it, Viktoria, today. We've covered so many topics. We really touched from local player, from niche, all the way to the global expansion and mass concurring plans.
That's true. That's the aim, to actually start asking all of those questions that a lot of times when you're talking about it, it makes sense that yes, this is what we should talk about. But when you're there daily dealing with the integrity, the details, sometimes the most obvious questions are not coming up. And that's why we need to have these conversations. And that's why we need to bring up to the surface the importance of not just dealing with the regulation, but the viability of the product as well, the subjective element of that compliance decision. Who is willing to work with you? As you said, the human touch to that too. Because the more we talk about these things, that's how we can actually put relevant standards in this industry and make sure that it's ethical and transparent and trustworthy, basically, for everyone involved. And of course, the whole goal is to serve the customers, you and me, and everybody watching us in a better way to create much better and more trustworthy, safer, and user-friendly products, financial products at the end of the day. So thank you so much for being here with us. I really enjoyed this conversation. And I think I'm just looking from your end as well when I encourage everyone that please share your comments. Tell us what are the problems that you are dealing with, or just share a story that you find interesting to share and share it with the community, because that's how we can grow together through all of those real life cases. What works for someone, what doesn't work for another person. So in this way that we can make this whole industry a much better one. So thank you so much. You can also email, of course, Sergey. I think I'm not ruining anything here just by showing your email address, and encourage everyone to reach out to you if there is any more questions or recommendation or comment. Please do so. And let us know also what other webinar topics you would like to hear about, because that's the goal. Together, we can create a much better, safer ethical industry. Thank you so much.
Thank you. Thank you, Viktoria. It was absolute pleasure to be in today, and wonderful conversation. Thank you so much. That's a pleasure.
Thank you.